Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into an 8K report from Dominion Energy, and believe me, it's not just about numbers and legal jargon. It's about how they're raising a ton of cash. What does Dominion need all that money for anyway? Let's find out. First things first, this report is dated March 6, 2025. That's the day something important happened that triggered the need for this filing. This document is like a snapshot in time, capturing a key financial move. Dominion Energy has just signed an agreement with a bunch of big banks like MUFG Securities, Scotia Capital, SMBC Nikko, Truist Securities, and Wells Fargo Securities. Think of these banks as middlemen, helping Dominion sell something to investors. And what exactly are they selling? Well, Dominion is offering two types of what they call senior notes. The first one is Series A senior notes due in 2030, and they're planning to sell $800 million worth of them. The second one is Series B senior notes due in 2035, and they're looking to get $700 million from those. Add that up, and you get a whopping $1.5 billion. These senior notes are basically fancy IOUs, promises to pay back the money with interest over a set period of time. Series A note will mature or come to term in 2030. The Series B note will mature in 2035. Now, these notes aren't just appearing out of thin air. Dominion registered them with the SEC, Securities and Exchange Commission, way back in February of 2023. That means they got permission to offer these types of securities to investors. It's like getting a license to sell a product. If you are curious for more details, there are exhibits with these notes. Exhibits 4.2 and 4.3 are there to view if you want to review them. Dominion Energy is making a big move to borrow $1.5 billion through these senior notes. It's a lot of money. This action signals something significant about the company's plans and financial strategy. Maybe they are planning on expanding their operations, maybe paying off debts or investing in new projects. Now, let's step back and look at the bigger picture. Dominion Energy is a major player in the energy sector. They provide electricity and natural gas to millions of customers. The energy sector is going through a massive transformation. There's a huge push towards renewable energy sources. Companies like Dominion are facing pressure to invest in solar, wind, and other clean energy technologies. Raising $1.5 billion could be a way for Dominion to fund these investments. They might be building new solar farms, upgrading their infrastructure, or developing new energy storage solutions. They might also use the money to lower their existing debt or potentially acquire other companies in the energy sector. The possibilities are vast. However, borrowing this much money also comes with risks. Interest rates can fluctuate, making the debt more expensive to repay. The company's financial performance could decline, making it harder to meet its obligations. And there's always the risk that the projects they invest in won't generate the returns they expect. Dominion needs to carefully manage this debt and make sure they're using the money wisely. What does that look like for the company? Let's review the pros and cons. On the one hand, $1.5 billion gives Dominion a lot of flexibility. They can invest in growth opportunities, strengthen their balance sheet, and position themselves for the future of energy. On the other hand, it adds a significant amount of debt to their books, which could weigh on their financial performance if things don't go as planned. It's a high-stakes game. As the energy sector continues to evolve, Dominion will need to adapt and innovate to stay ahead. Their success will depend on their ability to make smart investments, manage their debt effectively, and navigate the changing regulatory landscape. So, what's my take on all of this? Well, Dominion's move to raise $1.5 billion is bold. It shows that they're serious about investing in their future. However, it also comes with risks. Dominion needs to execute their plans flawlessly to make sure this bet pays off. I think one of the biggest opportunities for Dominion is to capitalize on the growing demand for renewable energy. If they can develop and deploy clean energy technologies effectively, they can attract new customers, reduce their carbon footprint, and create long-term value for their shareholders. One risk is that the regulatory environment could become more challenging. Government policies and regulations can have a big impact on the energy sector. Dominion needs to stay informed and adapt to these changes to avoid being caught off guard. Overall, Dominion's direction seems positive. They're investing in growth, adapting to change, and positioning themselves for the future. But they need to be mindful of the risks and manage their debt responsibly. Thanks for watching, and if you found this corporate decoder breakdown helpful, please like, comment, and subscribe for more insightful analysis of the world of corporate finance.